We have a breach of the critical black line. Let's jump in and discuss the details. This is urgent. What's up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we have a very important development in the price action of Bitcoin. As you can see on the chart, we have breached the critical black dashed line. What does this mean? Well, we're going to discuss that right now and break down the charts, because this line bears significant importance in giving us clues as to what could transpire next with the price of Bitcoin. Here we have the breach on the 4-hour chart. This dashed line I have had on my chart for the past 3 or 4 weeks. And as I mentioned in previous Bitcoin updates, this is the line that I will be paying close attention to, because something big could happen if we violate that line. So let's jump in and analyze this chart, break everything down, look at some other key bits of evidence that will give us clues so we can make an educated guess about what the next big move for Bitcoin could possibly be. All right, first of all, let's get rid of my handsome face. And here we are on the 4-hour chart. So this dashed line has been here for quite some time, and we are going to jump to the 1-day chart so we can make it a little bit more clear with the big picture as we scrunch this down and see some of the action that we have had over the past several weeks when Bitcoin came down from the all-time high right here at approximately 68,000. And since that point, we have been in distribution mode. That means that the price is slowly falling down back to the ground, where a correction continues until we get to a point that we could call a resting spot, where we could enter into the next phase. But warning, we might not be done with the distribution phase, and I will show you why. So as we see this action coming down from the all-time high, as Bitcoin just whipsaws around within the boundaries of this parallel trading channel, this is very important to know that the overall action has been downward ever since. Whenever you see price bouncing around within a parallel channel, we can call that a trend. Now, here's what happened. Once we got down to this previous low point, when we violated the third critical support and resistance zone at around 35,000, all of the bulls got super excited and were calling for a market reversal. They thought that this movement, this bounce was it, that this was the all-time bottom. I can't tell you how many people were reporting on YouTube and other places that this was the continuation of the bull market. I had my doubts, and that's because of the fact that we had too big of a correction coming down off of that all-time high down to this very low point. But as the overly bullish people thought, we saw a series of slightly higher lows and some rather deceiving stagnant flat highs. Here's our low point here. And then we had a higher low here. We came up and posted a higher high as it relates to this previous high point. But then we repeated that higher high right here. We jumped down to this next low point. And this is where everyone got mixed up. They thought that this was a higher low in relation to this previous point where they had called out the all-time bottom. However, this was just a fake out channel that had a slight upward incline. As we see the lines here, here's the lower end of this channel, here's the higher end of this channel. So while the action was cruising on along, we had yet another flat higher high, not a higher high. If you count the wick, it was a higher high. But if you count the candle close on the 4-hour, it was not. So we came back down, but then we produced yet another higher low. This is what got everyone all excited, where they thought for sure that this was the continuation of the bull market, of the bull cycle of the previous complete cycle for Bitcoin. So we did scoot on up here to the price of about 48,000. And that, in fact, was another higher high. But this is where it got dicey. After that point, we failed the support of this parallel trading channel. Now let's just stick some lines on here so we can make this clear. Here's the bottom of the channel. In fact, let's make that a line instead of an arrow. Here's the bottom of that parallel trading channel. Here's the top of that channel when you connect all of the highs. And this is why I use these parallel trading channels to let me know when we have a significant change in overall direction. Now, when we went below this bottom blue line right there, that's where I sounded the alarm. And I thought, this is not a good thing. So not only did we fail the bottom of that line, we came back up and tested it again. See this little move here? And what happened? We got rejected because the line flipped from support to resistance. Now, from the beginning of this movement, it was support here. We touched it again. It was support here. We touched it again here. Support. We wicked down to it here. Support. We touched it again. Support. And this is what led everyone to believe that there was a continuation of the bull market. But lo and behold, after we touched it once, twice, 3 times a lady, we failed that line. And so once we failed it, when we came back up to the line here, it flipped. Instead of support, it became resistance. And notice how the 50 EMA line, that's the 50-period exponential moving average, which means that we're going to take the average price of the chart for the last 50 4-hour candles, and then you post a price right here. So when we go back 50 candles, you get an average. 50 more candles, you get an average. 50 more, you get an average. Now, when we got to this point here and we failed the 50, that was the first hint. The second hint was rejection at the 50, where the 50 flipped from support here, when we bounced up, to resistance here after we failed the line and dropped below it. Now you can see that there is confluence between the bottom of this parallel trading channel and then the 50 EMA, where we got rejected right at that point. The next thing that happened was the first capitulation, and this is not even the big one. So when we got to this point, we dropped down hard. And notice how the price settles down into this side banding movement centered around this next big volume node. Now this is the VPVR. Instead of looking at the volume on a particular day or a particular 4-hour candle, because each one of these volume bars right here represents the amount that is traded during a 4-hour period. The VPVR, let's just write that up here for new people. Volume Profile Visible Range is what that means. It's looking at the volume that occurs at a particular price over history. And so you flip it from the bottom to the side and you make a profile. Now, this red line right here, this is called the point of control. That's the balance point. So we're going to put a POC right here so you can understand this point here that I'm about to make. This is the balance point of all of the trading, where we have 50% of the trading above the line and 50% of the trading below the line. And keep in mind, that's just on the visible range. If I squish the chart in, these bars change. This is just what we're seeing right here. It's a dynamic indicator, meaning that as you move it around, it changes. But that gives us clues as to what is going on. So after we came down and we tested the support right here in the thick of this volume candle, this one right there, notice that we just bounced up and down around this big volume candle. And as I was telling you before, I wanted to watch very closely to see what would happen at this black dashed line. This black dashed line, to me, is the line of demarcation. It's the last man standing. It is the wall of support that has kept us above this range. And my warning was that if we drop below this black dashed line, things could get ugly. Now, that doesn't mean that we're just going to continue to sail on down, but there are several indications that are telling us that we might continue down, and that black dashed line could end up being resistance rather than support. Now, what are the other indicators telling us on the 4-hour chart? The stochastic tells us that things are looking ugly because the fast line, which is the blue line, and the slow line, which is the orange line, are very divergent. Look at the tips of the lines and how far away from each other they are. Also, look at the angle that we are moving down. This is strong downward momentum. So that's telling me that until we get possibly down here, we won't see a reversal. Now, it could reverse because we don't normally have nice, smooth sine waves. In other words, the stochastic doesn't usually just do this and have a nice up and down, up and down. That would be a perfect sine wave. Instead, we have several switches in direction where it looks like we're going up, but then we reverse and go down. And then several little reversals along the way until we got to this low point. Moving up, we had several head fakes, 1, 2, 3, 4, where that tells me that we have choppy and erratic movement because we don't have a nice smooth up to the top, staying to the top right here when we were hitting that all-time high, and then a nice smooth trip to the bottom, back up, then down to the bottom. We have a lot of choppy action in this range right here, and that is not very stable. So that's what the stochastic is telling us. Now, what do we see downstairs in the MACD? Well, let's just take a look at this area here. Notice how the histogram went from green and then it goes to red, but we stayed down here and did a double dip under the 0 line, and then we came back up for air and we were printing green bars. Now notice those dark green bars, they turn light green when we're going down, dark green when we're moving up. Here we have several light green bars in succession as we head to the 0 line. Now we're at the 0 line, the moment of truth. What is the momentum? It looks like it's downward because the fast line is about to cross over the slow line right there. Do you see that? Now, this is not a guarantee. It doesn't mean that this crossover will definitely happen. But in all likelihood, it's going to happen, and these oscillators will move down. So that says we could get pulled down further from where we are already beneath the black dashed line. If we complete a candle close, meaning this 4-hour period ends where this current candle is. If that ends up below this black dashed line, then it's time to prepare for some more ugly downward action. But it's not a guarantee. Now, let's move on to the one-day chart, or this is the one-day chart. I want to look at the 1-week chart, and then we're going to look at one other big clue, which is the DXY, and that is the dollar index. But first, on the 1-week chart, look at this candle that is forming right now. It looks like we are below the black dash line on the 1 week candles right there. That is significant. Let's scrunch this action down just a bit so we can see these peaks and see a little bit more down underneath with the VPVR. All right. Notice that we've got this huge node. When these stick out, you call that a node. And these nodes tend to attract the price action. Those three are sticking out, which are below the current node that was trying to keep us on the black dashed line. But what are the indicators telling us below? We see a stochastic crossover. That's a bearish crossover because the blue line just dipped below the orange line. So the momentum is downward. We also see the oscillators on the MACD giving us a serious clue. First of all, the orange line and the blue line are in a divergent position and the momentum is headed downward. Second of all, when we look at the succession of peaks, here's peak number 1 that coincides with this first big run up. Here's peak number 2, which was a lower high on the oscillators, but it coincides with the all-time high. And that should have been the clue to tell us that this was it right there. Notice the third peak coincides with this peak on the stochastic and gives us the lower high after the blow off top at the market cycle peak. So this means that as we are printing these negative bars on the histogram, we could go lower. The only good thing is we notice that there are 2 light red bars on the histogram, which says that the direction of the histogram is trying to get back to the 0 line. But there's no guarantee that it will hold. We could turn around and print another red candle after we see the close of this candle on the 1 week chart. If the 1 week chart closes a candle below our black dash line, then that is an absolute confirmation that we are going to see some lower lows in a significant way. And in fact, let's jump back to the 1 day chart, and I'm going to show you what I see with this crazy side banding action. Let's just flip this up. Here we go. In fact, we'll do this on the 1 day chart. It'll be easier to see. And we'll move this out just a little bit. I'd like to compare this to a ride that we often see at the county fair, and it's called the gravitron. Who's ever been on the gravitron? That's the thing where you get into this big circle that has a wall, a big wheel, and it's spinning horizontally. As it spins, it's treating you like a centrifuge, and it's forcing you by the centripetal force of the angular, circular momentum. It makes you stick to the walls. And then after you hit a certain speed, they drop the floor, but you don't fall because you're stuck to the wall. Because the centripetal force that is pinning you to the wall is greater than the force of gravity that would cause you to drop down when the floor drops out. So here we are in this action right here, and we're inside a gravitron. It's spinning around and around and around and around, and we're stuck to the wall around this point of control. But guess what? The door, the trap door, is the floor. And right now, the floor just dropped out. But when we drop below the black dash line, this will have the same effect of stopping the wheel from spinning. Now, if you're in the gravitron and you're stuck to the wall and the floor has dropped out and is 10 feet below, but then they turn the machine off and stop the spinning, what do you think happens to everybody inside the gravitron? Well, if you guessed everybody would fall and crash down to the floor, you guessed right. When you're in the gravitron, they let you stick to the wall and they keep the machine spinning. And then they bring the floor back up. They give you a thrill and then they bring the floor up and your feet are now safely planted on the floor. Then they can stop the machine. However, if we stop the machine before the floor comes up, we crash down. So after we've had all of this windy action right here, the gravitron is spinning us, making us stick to the walls. and then the trapdoor falls out. The bottom falls out here, okay? But now, below the black line, this means we're going to turn the gravitron off without bringing the floor up. And if that happens, we are going to drop down to the floor. So if we go back to our 1 week chart and we scrunch this data in like this, we can get clues of where that floor is. And right now, the only thing that I have to go by is this volume node, and of course, we've got this big one down here, which, good Lord, I don't think we would have any chance of going down that far. However, we need to look at what the price is of the nodes that are sticking out, which could be the floor of the gravitron. Here, the first one is at a price of around 23,000. We've heard a lot of talk of that, and that's why. It's because there's a volume node there. The next one is at about 18,000 and change. Next on down, there's one at 15,400 and change. And there's one last one right here at 14,500, somewhere around there. So I'm thinking that there is a possibility when we look at probabilities, we would say that the highest probability is a drop to this first volume node. The next probability, which is less likely but possible, is to this volume node. And then the last one, we'll just leave these three here, is this one. So these are the possibilities of what we could see: a drop to this floor, a drop to this floor, or a drop to this floor. And it's probably going to be vertical and violent. So get ready for that, because we don't know when it could happen, but it could be very, very soon. All right, so that is our 1 week chart. And now let's jump over and look at the DXY, because this gives us another big clue. We've been hearing about the DXY in the news as inflation is going bananas. The recent report is that we are at 8.6%. With inflation out of control, the DXY is surging. Notice how the DXY has been on this romp from this low point all the way up to this high right here. We had a quick correction, but now we're looking bullish again as the DXY is surging higher. And we're at the top of the 1 week candle. Notice that you don't see a wick here. In other words, we're at the high point of this candle. As the DXY continues, and if we see this impending crossover play out right there, it looks like the fast line has just done a reversal in direction and it's about to cross over the slow line, then that means the DXY will surge even further. We also see a fake out and then a divergence where the blue line looked like it was coming down to the orange line here, but notice how it just changed direction and now it's poking its head up again, and we have a dark green candle on the histogram. We had 3 weekly light candles, which indicated downward movement, and now we have a dark green candle. That's a warning right there, because that says the momentum on the DXY is moving up. So that is what I see, and hopefully you have learned something from this. Hopefully this is simple enough to give you a clear picture of what is possible. Now, none of this is financial advice. And I'm not saying that I'm a bear or a bull. What I am is a guy who looks at the chart. I just read the chart and I take from it what it gives me. So BTC on our 4 hour, just since we started this video, has closed another candle below the black dash line. There it is right there. In fact, I didn't realize it, but this is the 3rd candle in a row that is closed below the black dash line. The first one was here that took us beneath the black dash line, and then our second one is the confirmation. So we're already beyond confirmation. There's our 3rd candle right there that we are forming now. What could happen? We could have a slight reversal. What we could see here is that we move back up towards the black dash line. But our big indication, if we have a reversal, will be what happens at the black dash line. If we get a rejection there, all bets are off. We're going down. If we don't already do it here and continue. If we get this slight little recovery here, hold your horses and don't believe all of the idiots on YouTube who say the bull run is back again. Because every time we change direction on the 4-hour chart, everyone loses their mind and calls for another bull run. Don't be silly and believe the nonsense. Read the chart. Now, none of this is financial advice. Make your own decisions, do your own research. I'm not telling you to buy or sell. I am just calling the action as I see it play out on the chart. So that's all I have for this critical update. And thank you for watching. And I would like to give a special shout out to my super thanks people. Yay! And that would be Y2K Biz up in Canada with a $13.99 super thanks. Thank you very much for that. And my homeboy, Jai Dillon, with a $5 super thanks. Those happened on my last Bitcoin update, and I super appreciate you for helping me to defray the cost of producing these video updates. Woo! All right. Last but not least, I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And I will keep you posted as this action plays out. Keep your eyes on the action and don't fall asleep on this chart movement that we have going on right now. And until next time, stay safe. We'll see ya. This is Carlton, and I am out.